Welcome to our exploration of digital custody and the knowledge gap that exists within this rapidly evolving field. As digital assets become increasingly mainstream, understanding how they are managed, stored, and protected is crucial. Many individuals and organizations are still unfamiliar with the intricacies of digital custody, which can lead to vulnerabilities and missed opportunities. In this video, we'll break down what digital custody means, why it matters, and how bridging the knowledge gap can empower both professionals and everyday users. Let's start by defining digital custody and setting the stage for our journey. Digital custody refers to the safekeeping and management of digital assets, such as cryptocurrencies, NFTs, and other blockchain-based tokens. Unlike traditional custody, digital custody involves unique challenges including cybersecurity risks, regulatory compliance, and technological complexity. Understanding these differences is essential for anyone looking to participate in the digital asset ecosystem. By grasping the basics of digital custody, users can make informed decisions about their assets and avoid common pitfalls. For the past decade, digital assets have gained significant traction, transforming how people invest, transact, and store value. Cryptocurrencies like Bitcoin and Ethereum, along with NFTs and tokenized assets, are now part of mainstream financial conversations. This shift has created new opportunities, but also introduced complexities that require specialized knowledge. As digital assets continue to grow, the need for secure and reliable custody solutions becomes more pressing. Managing digital assets is not without its challenges. Cybersecurity threats such as hacking and phishing pose significant risks. Additionally, regulatory uncertainty and evolving compliance standards make it difficult for custodians to navigate the landscape. Technological barriers, including interoperability and scalability, further complicate the process. Addressing these challenges requires a deep understanding of both technology and regulation. Despite the growing importance of digital custody, there remains a significant knowledge gap among users and professionals. Many are unaware of best practices, security protocols, and regulatory requirements. This gap can lead to costly mistakes, asset loss, and legal complications. Bridging this divide is essential for fostering trust and ensuring the safe adoption of digital assets. Knowledge gap in digital custody exists for several reasons. The rapid pace of technological innovation makes it difficult for users to keep up. Regulatory frameworks are often unclear or inconsistent across jurisdictions. Additionally, the technical complexity of digital assets can be intimidating for those without a background in IT or finance. These factors combine to create a barrier to entry for many potential users. For individuals, the knowledge gap can result in poor asset management, exposure to scams, and difficulty accessing digital financial services. Without proper understanding, users may fall victim to phishing attacks or lose access to their assets due to mismanagement. Education and awareness are key to empowering individuals to safely participate in the digital economy. Organizations face their own set of challenges when it comes to digital custody. Lack of expertise can lead to compliance failures, security breaches, and reputational damage. Companies must invest in training and robust custody solutions to protect their assets and maintain trust with clients. Bridging the knowledge gap at the organizational level is vital for long-term success. Education is the cornerstone of bridging the knowledge gap in digital custody. By providing accessible resources, training programs, and workshops, stakeholders can equip themselves with the necessary skills and understanding. Educational initiatives help demystify digital assets and promote safe practices, making the ecosystem more inclusive and secure. Establishing industry standards is another critical step in bridging the knowledge gap. Standards provide clear guidelines for custodians, users, and regulators, ensuring consistency and reliability. They also help mitigate risks by outlining best practices for security, compliance, and asset management. Adherence to industry standards fosters trust and stability in the digital asset space. Regulatory frameworks play a pivotal role in shaping digital custody practices. Clear and consistent regulations help custodians navigate legal requirements and protect users. However, the lack of harmonized regulations across countries can create confusion and hinder adoption. Collaboration between regulators and industry stakeholders is essential for developing effective frameworks. Advancements in technology are helping to bridge the knowledge gap in digital custody. Solutions such as multi-signature wallets, hardware security modules, and blockchain analytics tools enhance security and transparency. By leveraging these technologies, custodians can offer safer and more reliable services, making digital assets more accessible to a wider audience. User-friendly platforms are essential for encouraging wider adoption of digital custody solutions. Intuitive interfaces, clear instructions, and responsive customer support make it easier for users to manage their assets. By prioritizing usability, platforms can reduce barriers to entry and empower users to take control of their digital assets. Implementing robust security protocols is fundamental to digital custody. Encryption, authentication, and regular audits help protect assets from unauthorized access and cyber threats. Educating users about these protocols ensures they understand how their assets are safeguarded and what steps they can take to enhance their own security. Custodians play a vital role in the digital asset ecosystem. Their responsibilities include safeguarding assets, ensuring compliance, and providing transparent reporting. By adhering to high standards and maintaining open communication with clients, custodians can build trust and contribute to the overall health of the digital asset market. Educating clients is a key responsibility for custodians. Providing clear information about risks, security measures, and regulatory requirements helps clients make informed decisions. Ongoing education initiatives ensure clients stay up to date with the latest developments and best practices in digital custody. Transparency is essential for building trust in digital custody. Custodians should provide regular updates, clear reporting, and open communication channels. Transparent operations help clients understand how their assets are managed and foster confidence in the custody process. Effective risk management is crucial for digital custody. Identifying potential threats, implementing mitigation strategies, and conducting regular assessments help protect assets. Custodians must stay vigilant and adapt to emerging risks to ensure the safety of their clients' digital assets. Collaboration between custodians, technology providers, and regulators is vital for advancing digital custody. Partnerships enable the sharing of knowledge, resources, and best practices. By working together, stakeholders can address challenges and drive innovation in the digital asset space. Innovation is shaping the future of digital custody. New technologies such as decentralized custody platforms and smart contracts are transforming how assets are managed. These innovations offer greater security, flexibility, and transparency, making digital custody more accessible and reliable. Centralized custody solutions leverage blockchain technology to eliminate intermediaries and enhance security. Users retain control over their assets, reducing reliance on third parties. While decentralized custody offers many benefits, it also requires users to understand the underlying technology and take responsibility for their own security. Smart contracts automate asset management and custody processes. By embedding rules and conditions into code, smart contracts reduce the risk of human error and increase efficiency. Understanding how smart contracts work is essential for anyone involved in digital custody, as they are becoming a standard tool in the industry. Non-fungible tokens, NFTs, present unique custody challenges. Unlike cryptocurrencies, NFTs are indivisible and often represent digital art or collectibles. Custodians must develop specialized solutions to manage, store, and transfer NFTs securely. Understanding these nuances is important for anyone interested in NFT custody. Tokenized assets, such as real estate or stocks, are increasingly being managed through digital custody solutions. These assets require robust security and compliance measures to ensure their integrity. Custodians must stay informed about evolving regulations and technological advancements to effectively manage tokenized assets. Institutional investors require advanced custody solutions to manage large volumes of digital assets. These solutions must offer high levels of security, compliance, and reporting. Institutions also demand transparency and reliability, making it essential for custodians to meet rigorous standards. Retail users need accessible and user-friendly custody solutions. Simplified interfaces, educational resources, and responsive support help retail users manage their assets safely. By catering to the needs of retail users, custodians can promote wider adoption and bridge the knowledge gap. Custody solutions for minors require special considerations such as parental controls and legal guardianship. Ensuring the safety and proper management of assets for young users is essential. Custodians must develop policies and tools that address the unique needs of minors in the digital asset space. Cross-border custody introduces additional complexities such as differing regulations and currency risks. Custodians must navigate international legal frameworks and ensure compliance across jurisdictions. Understanding these challenges is vital for anyone managing digital assets globally. Privacy is a major concern in digital custody. Users want assurance that their personal information and asset details are protected. Custodians must implement privacy-focused solutions such as encryption and anonymization to safeguard sensitive data and build trust with clients. Preventing fraud is a top priority for digital custodians. Advanced monitoring tools, transaction verification, and user education help detect and prevent fraudulent activities. Custodians must stay proactive and adapt to new threats to protect their clients' assets. Disaster recovery plans are essential for digital custody. Custodians must prepare for scenarios such as cyberattacks, system failures, or natural disasters. By developing robust recovery strategies, custodians can minimize downtime and ensure asset safety even in adverse situations. Insurance is becoming an important component of digital custody. Policies that cover asset loss, theft, and cyber incidents provide additional protection for users. Custodians should educate clients about available insurance options and help them select appropriate coverage. Understanding custody fees is important for users and organizations. Fees can vary based on asset type, volume, and service level. Transparent fee structures help clients make informed decisions and avoid unexpected costs. Custodians should clearly communicate their pricing models. Client onboarding is a critical process in digital custody. Custodians must verify identities, assess risk profiles, and educate new clients about custody procedures. A smooth onboarding experience sets the tone for a positive client relationship and ensures compliance from the start. Providing ongoing support is essential for maintaining client satisfaction. Custodians should offer responsive customer service, regular updates, and educational resources. Continuous support helps clients navigate challenges and stay informed about new developments in digital custody. Feedback mechanisms allow custodians to improve their services and address client concerns. Surveys, reviews, and open communication channels help custodians gather valuable insights. By acting on feedback, custodians can enhance their offerings and build stronger relationships with clients. Continuous learning is necessary for staying ahead in digital custody. Custodians and clients alike must keep up with technological advancements, regulatory changes, and emerging threats. Ongoing education ensures that everyone remains informed and prepared to manage digital assets safely. Engaging with the digital asset community is beneficial for custodians and users. Forums, webinars, and industry events provide opportunities to share knowledge, discuss challenges, and collaborate on solutions. Community engagement fosters a culture of learning and innovation. Future of digital custody is shaped by ongoing innovation and evolving regulations. Emerging trends include decentralized finance, DeFi, automated custody solutions, and enhanced privacy features. Staying informed about these trends helps custodians and users prepare for the next wave of digital asset management. Preparing for change is essential in the dynamic world of digital custody. Custodians and users must remain adaptable and proactive in response to new technologies and regulations. By embracing change and investing in education, stakeholders can ensure their assets remain secure and their knowledge stays relevant. Let's look at a case study of successful digital custody implementation. A financial institution adopted advanced custody solutions, invested in staff training, and maintained transparent communication with clients. As a result, they achieved high levels of security, compliance, and client satisfaction. This example highlights the importance of bridging the knowledge gap and adopting best practices. From our case study, we learn that investing in education, technology, and transparent operations is key to successful digital custody. Organizations that prioritize these areas are better equipped to manage risks and build trust with clients. Continuous improvement and adaptation are essential for long-term success. Bridging the knowledge gap in digital custody requires collective effort. Custodians, users, regulators, and technology providers must collaborate to share knowledge, develop standards, and promote safe practices. By working together, we can create a more secure and inclusive digital asset ecosystem. To summarize, digital custody is a critical component of the digital asset ecosystem. Bridging the knowledge gap involves education, technology, collaboration, and adherence to standards. By focusing on these areas, stakeholders can protect their assets, comply with regulations, and foster trust in the digital economy. As we conclude, remember that bridging the knowledge gap in digital custody is an ongoing process. Stay informed, invest in education, and collaborate with others in the industry. By taking proactive steps, you can ensure your digital assets are safe and your knowledge remains current. Thank you for joining us on this journey to bridge the knowledge gap in digital custody.